Good morning, everyone. What's up? What's up? How are you doing? Hope you're having a wonderful week. So, welcome again to our Wednesday analysis of the markets, doing a recap of what we looked at on Monday and then see what capable trades we have the rest of the week. But before we go into that, I'll look at a few things. Let's look at when you're trading the Forex market or any market, you need to understand the whole market as a whole. So, you need to understand the whole financial market. So, it's huge. So, Forex is just part of it. So, we have stocks market, we have bonds, we have derivatives, we have ETFs, and recently we've had cryptocurrencies which came in the scene in 2009. So you need to understand the whole scope, but no rush into jumping into all of them, but just understanding them at least a bit of it before you start dwelling into it. So yesterday we were looking at a few stocks. The few stocks we've been looking at, just watching, speculating. We're watching Tesla. If you know Elon Musk, he's become the second richest man, past Bill Gates, heading for Bezos. Right now is at $136 billion. So we look at a few things over there. So if I share my screen, and then if you have any questions, please just ask in the chat room and we'll be sure to answer. But before I analyze the markets, let's just look at a few things over here. I hope you can all hear me. I hope I'm loud and clear. And with that said, let's look at a few things. So these are the things you should be looking at if you really like the financial markets. Trading is not all about analyzing the pairs, understand what is also going on around the world. So this website or this site I'm on, it's called, if you go here, so you just track billionaires. So instead of always going to Forbes, we like using the Bloomberg Billionaire Index. So if you can search for it, just search for Bloomberg Billionaire Index, and you'll find this page where you can track the richest people in the world. You can see over here, let me just expand it. So this year you can see Bezos is still number one, so 183 billion. Bezos is the one who founded Amazon. And then now we have Elon Musk. Most eyes on Elon Musk. People are watching what he's doing. You can see year to date, this is year to date change. He's added $108 billion this year alone. So that's crazy, it's unprecedented. And if you click on him, if you click on any of this person, you can go, it will open the page where you can get more information about what they're doing, what company they're doing. So he owns a couple of companies. He's the CEO of about 3 or 4 companies, Tesla being the most known. So you can see Tesla hits $500 billion market cap for the first time. So it's worth $500 billion. This market has really surged. His own net worth, if you go back to here and look at his net worth has gone 392% this year alone. Starting of the year, he was about 25 billion, and now you can see he's worth $136 billion. If you don't know how much that is in Kenya shillings, that's about 13 trillion Kenya shillings. I have never had that before. But so he's worth 13 trillion Kenya shillings, way more worth than Safaricom and all companies. Than the GDP of Kenya, as in it's too much. His company itself has gone to $500 billion. So that's just something you should pay attention to, especially people who are trading things like Nasdaq, S&P, because Tesla is going to be added on the S&P 500 this December. So you need to follow such things if you're trading indices and stocks and all that. On other news, cryptocurrencies has become a buzz again. We don't really advise on this one. We normally tell people to do their own research on this one, but Ken talked about this the other day when he was analyzing Bitcoin, which has gone back to all-time highs. We remember 2017, before the crash, this thing was at 19,000, 20,000, fell all the way to 3,000. It was more than 85% drop, and now market has gone back to where it was at the end of 2017. So you should also follow cryptocurrencies, especially young people. This is something you can really understand. It's still at its infant stage. It's still young. It's about 10 years now. Most of the cryptocurrencies like Ethereum, which is number 2, just came into the scene around 2012, 2013. So it's not even more than 10 years. Very, very young. But with that said, that's what I had, just extra information of what you can understand. So every day we'll be doing something new, just looking at what is happening in the markets instead of just analyzing the market on its own. So Go to this page if you like following billionaires, just seeing what they're doing in the world, what they're shaping. You can see right now we have 5 people who are over $100 billion. This is very unprecedented, and it's quite something you should follow. So just know these guys know what they're doing. If you don't know, most of the billionaires in the world come from finance. So finance, people who are investing, people who are trading, people who are in stocks and all that, most of the billionaires come from finance industry. So if you can get to look over here, but the ones who are very, very rich, most of them come from technology. So you can see technology is there are very many technology people over here: retail, consumer, industrial. Just go through this page when you get time, and a few weeks from now we'll look at it again, maybe before the year ends. So with that said, if you go back now to analyzing the markets, remember, if you have any questions, please ask me in the chat room. I'll be sure to answer. This is the Tesla stock market chart analysis, but there's no need to really go through this. We've already seen it's gone to all-time highs. So just looking at a few pairs we've been having this week, this week market has really gone up, down, up, down. This is the DXY, so dollar index. Just looking at the relative strength index, relative strength of the dollar, we can see, as we remember, we've been covering lower lows, lower highs. So we're really focusing on this level holding, but you can see today this level market has broken below, opened with a gap. So let me just get rid of this red line. So you can see this is what I'm talking about. You can see this support was acting as support, and market is starting to break below it. So with that said, we're starting to see the dollar weakness continuing. But so far, I had a short position on Aussie dollar, which I came out because I was betting on this market to still go up until we retest these lines before we go down. But you can see market sort of on, this was Monday or Tuesday, one of the two, market came with a lot of momentum to the upside. So we saw that bullish momentum going to continue, but we had that change in sentiment and market continued going back down. If you look at the 1 hour chart, I sort of have this pattern that I'm watching. So if you know I always trade patterns, that is what I'm looking at. I don't pay much attention to indicators, oversold, overbought indicators. That's not how I trade. So looking at this pattern is what I'm watching. If we get a break of this, then we can still have that continuation to the downside. If it holds, maybe that pullback to the upside, but so far market has really been choppy, not really getting that clear direction of where the market is going. So I had that short position I had on Aussie dollar. Let me show you the basic and ideology I had behind it, which I still, now I'm 50-50. There's still potential. Okay, if I go to the daily chart, because I do a top-down analysis, okay, so we had this consolidation around here. So this was around 78.6. This was acting as a very strong resistance level. So I had a good short position then. There's just waiting for it to retrace, and then we continue going back up, because long term, as I said, if you even go back to the weekly chart, I'm still very bullish on this pair. And I'd written a few weeks ago, if you can see over here, I said I'm strong support. I'm strongly bullish because of the pattern forming on the daily chart. So still looking for this market to continue to the upside. So that short position I had was just, I was looking for a correction before market actually goes to the upside. So what I had, I sort of had this triangular formation. So triangular formation, quickly when the market touched this level over here, so I had that triple rejection. I got a good short entry, and market fell about 60-70 pips from my entry from that level. But I was targeting the market at least to go back further lower before we continue to the upside. But we had that quick turn in momentum, and you can see clearly what happened. But now if you go down, before I go down to the 1 hour chart, just what I was showing you on the daily chart. So I was looking at this resistance level, paying key attention to the candlestick formation. So I was looking at that resistance. You can see this slowdown in momentum here. I did not expect this bullish momentum to come. So it's very bearish for the past 2 days, but yesterday market came with strong momentum, and my stop loss was just above this level, above 78.6. now you can see this level that was acting as resistance is now acting as support. So as long as we remain above this level, we can see this market continuing to shoot to the upside. So now if I go down to that 4-hour chart, 1 hour chart, so I really have different biases. So on this one, you can see I had another pattern. This was sort of a channel formation. Market was forming higher highs, higher low, higher high, higher low. Then we got that new high where I got stopped out, and then market sort of got this double rejection up here early on today morning. This was around 3 a.m. So if you're trading pairs like Aussie dollar and such, they are antipodian pairs. So they tend to move during the Asian session or the Sydney session, which is normally our night time. So you can see market really fell today morning, and then now it's sort of being held by that daily chart level I was showing you about. So right now I'm sitting out. I never force things about the market. Wherever the market takes us, we just respect it and follow it, not fighting with it. So when you come out of a market, not jumping quickly into it, you really need to be rational when that happens to you. The next thing I look at, USD CAD. For our chart, USD CAD, I remember I covered this on Monday when we last talked about it. So market finally reached this level, so support level. So we're looking at this market. If we get that dollar strength, which now I'm not really sure, I'm just waiting to see, but if the dollar strength comes, this will be a simple impulse correction, impulse to the upside. We can see market has come down to 78.6, and if the momentum comes to the upside, it can continue at least until this level. So I have this resistance level that I'm watching. So you can see this resistance level is that what I'm watching. If market can come back to this level, then we get that short from this level. So I'm looking for dollar strength, then dollar weakness. But for now, I'm just watching what the market is telling me, and I'll follow it. So if you're trading those two pairs, that's what I'm watching. I don't have much apart from that. I'm just looking at dollar index, watching what it's showing me. If it shows that good entry, if I see dollar strength coming in, then I'll be looking to execute those trades on USD CAD, especially USD CAD, because that is what is offering me so far a good risk reward. So I won't be betting for anything below the 78.6. If I use my risk reward to let's say from there, and I'm targeting around this level, and I just have my stops below the previous low at this level, then I'll be looking for about a risk reward of 1:3. So I don't have that trade yet. I'm waiting for an entry signal. So apart from just analyzing the market, you wait for an entry signal before you jump straight into it. But this bull momentum started at night at around 4 a.m. as well. So I'll wait to see during the London session, which is about to open in the next 10 minutes, and then after that make my decision for the day. But that's what I'm watching. I'll leave the floor to Ken. I don't want to waste so much time because I've already talked about a few things. So I'll leave it there, I'll leave the floor to Ken, and I'll see you guys on Friday. And if you've not gotten this video from the start, what we talked about, I'll be uploading it on YouTube later on today, so no worries about that. But that's it from me. We'll answer your questions at the end of the video. Peace.
So good morning guys. Caleb talked about some crucial things that we look at in the markets, so I won't talk much about them. For me, I'll jump straight into some of the markets that I've been watching, some of the trades that I've taken, and then probably we'll meet on Friday. So on Monday when I was doing the Zoom session, I talked about a probable sell position on GBP USD. I talked about a probable trade on gold, a short position on gold, and also oil. I had some long perspective, and most of these patterns played out like I expected. But as usual, sometimes you do make mistakes when you're playing the game, and I made some mistakes, which I think is important for me to share with you. And maybe you can look at the lessons that you can learn from some of the mistakes I'm making. You can try and learn from our mistakes, or rather make your mistakes, which I bet will be the same. And then you can learn from them and probably waste a lot of time, money and energy, pain, all that thing. So looking at GBP USD, for me, I think when I came into the office on Monday, there was a very good sell position all the way to the 1.33 level. So my first initial target was to this level. It was about 100 points from the 1.34, but immediately markets started moving lower. I think I expected markets to at least touch this level, the 1.3250 level, because of the top-down approach and what I normally look at in the markets. So markets went down all the way to the 1.3262 level. So it just missed my target by about 12 pips. And from then on, markets have not gone back to my level, and I've actually exited this position at break-even. So the main mistake that I made is I always believe when markets move 80, 75 to 100, 75 to 95% to my targets, I should be very comfortable to close off the position. So such a position for me not to close off was not really wise, especially after this hammer formation in this bullish momentum, because there was a high chance you could get this pullback and then a drop, But again, we got this pullback, a break, and markets came back and then went back higher. So that's a mistake. I think the whole idea, the basic idea that I was trading was this short all the way to the 1.33 level, but my other impulses and ideas gave me an idea that I should wait for these markets to attain this level, which never happened, and I gave back all the profit that I had made on this very, very beautiful trade. So these are some of the good trades you take, but you don't end up with good cash on your bank account only because you never manage the position in the best way possible, which I think is also something that you learn. And for those of you who are trading demo accounts, I think it's very, very hard for you to use a demo account to learn how to manage positions. You need to be in the market, because when you're in the market, that's the only way you can learn how to best manage your positions. You can learn how to execute which trades, which patterns work best, but I don't think you can learn much about how to manage trades on a demo account. So that was the first trade that I had. I also had some gold positions which worked out really, really well. For this one, I came out at my levels and I was very, very happy with the profits I made. And markets continued moving low. Actually, I left about 300 pips on the table, but I've learned over time to get used to making such things and to appreciate the targets. If your targets are met, you shouldn't care much about what goes on after the markets moved. So I think for those of you who have been watching our Zooms for quite some time, I've been calling on 1750, and ultimately markets are moving to that level. So if I was a long-term investor, probably I'd get this one right. But now since I'm short-term, I tend to come in and out. I got some of the moves, but I missed some. Like this was one very beautiful move that I missed. I don't know how I missed it, but I just missed it. But finally I got this one. And I think there's still some downside. I think from 1850, we could get a pullback to 1850. And then the final move now to 1750 towards December. And then in January now we'll come back to the bull move, the initial bull move. The whole of the idea is based on the weekly chart. So there's a pattern developing here. Clearly you can see markets have gone back. They started calling on this level all the way from around 1970. And now we are moving down all the way to 1870. It was not easy to get all these moves due to the consolidations, fake breakouts, all these things that are in the markets. But this is the level. I think after we attain 1750, 1700, then gold could now turn, and the next level, the next stop for me now on the bull side will be 2300, 2500. That's why I think markets will ultimately again top before the significant correction happens again from the big picture perspective. So I think towards next year I'm looking for longs on gold, and I'll be heavily bullish when the market starts ticking up, and I think that's where the money is now. This move to the downside is almost over. We have about 1,000 points to the downside, and from then on now things will turn to the upside and it will be bulls. That's how I'm looking at market, and that's how I think markets will play out. But let me just wait. So that's gold. I don't think I have any setup for now. The only setup I have for now which I'm riding is oil. So oil, I think we're again back into a bull market. Easily we could go to $60 a barrel, 58, 55 especially is a good target, about 1,000 points from where we're currently trading. But on the daily chart, I think the move to the upside is overdone. So I'm betting that there's a correction at least to 42.5 or 43 levels before the next bullish leg, even if it's towards next month, which is probably next week. I think there's a short here, and I'm planning to make some money on it, about 2% of my account from this trade. So the whole idea was on the 4-hour chart. We had a breakout and markets visited one of the levels that we like executing a short at. So if I just change my pivot points, we visited this level, and I think markets could ultimately go back. In the event that we break this level, 45, 46, we could easily see 47 or even 48, but I think there's a short again from this level. So for now, I don't want to be on the short side, not on the long side, but I'll be patient and wait for the markets to play out before making my decisions. So that's the only trade I have for now. You can see clearly this is how it's running. So I'm looking for markets to come back all the way to 42.5. That's my target, and then I'll be done for the week. I don't think there's any other position I'm stocking. Tomorrow is a bank holiday in the US, for those of you who don't know. So I don't think there'll be much movement. Again, Friday is towards the weekend, so not much movement again. So probably good trades will come in next week. But let's wait and see what will happen today during the New York session. London is just opening, and then we can be able to tell how to position ourselves towards next week. So I think I'll stop there. I don't have much to say. If there are any questions, I'll try and answer them. If there are no questions, I will stop there. Anything on EJ? So EJ has been quite interesting to me, but I never took part in it. So it's one of the trades that last week I had some positions on EJ. I was too early on the position, so let me just share with you again what happened there on the daily chart. So this is EJ on the daily chart. So for me, I think I've always been looking for a long position on this one. So for a long time I thought that immediately we got this move to 125, I thought that this was just a minor correction and probably we will keep on moving high, and I'm still thinking that we have some upside, probably towards 130. That's why I'll change my bias and start looking for shorts. But now this correction, I started looking for a long when this correction was moving lower. So you can see clearly from my patterns here, they were marked. I looked for a long in this position and I was faked out at this time. So this candle, which has a very huge wick, was quite bullish, and I had some long position. Got faked out and squeezed all the way to my stop losses, which were at 123. But the market stand just there and started moving higher. So this week I never executed a position. So actually this was the right trade to come into this week. So markets are moving higher. I think ultimately you could get to 125, just a minor correction, and then you could get to 130, 126.5, 130 easily, and then you could get a major correction. But for now, that's what I have on EJ. So I don't have any setup really, because I'm looking for this market to come back all the way to 125 and keep on moving higher. So that's why I never actually looked at it. But if, in case a pattern arises probably towards next week, then I'll share it with you guys. But that's what I'm watching on EJ. So I think I'll stop there and we'll see you guys next time. So GA, GBP, New Zealand dollar. So some of these pairs you don't look at them. So over time you learn that once you're trading markets, you need to focus on a few pairs. Otherwise, if you're market hopping, Caleb calls it market hopping, jumping from one market to another, there's a high chance you'll miss some of the best opportunities in your pairs. So over time you need to reduce some of the pairs that you're looking at, and for me I eliminated some of these pairs. Like I used to look at GA, but due to correlations and all these things, I eliminated GA. So one of the things that I think most people who are trading don't look at is the effect of the correlation risks on their account. So for example, if you're trading 5 pairs and all your pairs are related to the dollar, there's a high chance your account will be moving up and down just like the dollar is moving up and down. So depending on how you're positioned in the markets, that will really affect your account. So what you need to do is to focus on at least having the 5 best pairs which are not highly correlated. So like for me, I have 2 currencies, 2 commodities and 1 index. So I'm actually planning on adding an index so that I can have 2 commodities, 2 currencies and 2 indices. So what will happen after you have such a combination of assets that you're trading is you'll reduce the correlation in your account moving up and down, and that will really help you in the long run. Because if you think about it, some of these pairs really move in one direction for a very long time and are highly correlated. So it's very hard to reduce the effect of having one trade, and most of the setups will be the same. So if the setups are the same, it means you're only trading one pair, and how it zigs ups and down will really affect your account. But if you can be able to reduce the effect of the correlation on your account, then you can be able to really improve your performance over time. If you're taking positions, again, try and minimize taking positions on the currencies all at the same time. So like for me, I normally try and take 1 to a maximum of 3 trades at a go. And if I have 3 trades, I'll also want them to be not correlated. So maybe I'll have oil, I'll have maybe gold, and maybe one currency I'll have an index, gold and something else, or I'll have gold and an index, or gold and a currency. So try and minimize that, and it will ultimately affect how your account moves up and down. So when I started out, it will really affect my account. My account will zig up and down a lot, but once I worked on that, it was quite easy for me to manage the volatility in the markets, and my account ultimately, the volatility also went quite down. So that's why I reduced some of these pairs, and I don't look at most of them now. So that's why we don't share them with you. So I think I'll stop there. For those of you who are looking for GA, EJ, you'll just have to do your own thing, look at some of these pairs well, understand them, and then you can be able finally to make your own decisions. So we'll see you guys on Friday after the bank holiday, and hopefully you'll have made some money, lost some money, and learned some lessons, which is normal in the markets. So if you're trading, learn to take your losses. If you're not willing to take your losses, I think you're not willing to trade. When you're trading, you love to take losses, and you need to learn how to take them and take them well. So I'll stop there, and I'll see you guys next time.
Love taking losses.